Hello and welcome to Explain the Charts. Today is June 4th, 2025. We're dissecting USDCHF, combining recent news and in-depth chart analysis. First, let's recap the news. Trump's tariffs on steel and aluminum have just been implemented, raising concerns about trade disputes. FX Street reports that the USDCHF is holding near 0.8250 amidst these tariffs. This implementation could impact market sentiment. Simultaneously, the Swiss Consumer Price Index declined, increasing expectations of a rate cut by the Swiss National Bank, potentially moving into negative territory. Investing.com also mentions that USDCHF's movement is tracking global dollar flows in addition to local fundamentals. Now let's switch gears and examine the daily chart. Looking at the daily chart for USDCHF, we see a clear downtrend developing over the past few months. Starting from highs around 0.91 in early 2025, we've steadily declined to current levels near 0.82. This decline may be correlated with the anticipation and implementation of the SNB rate cut, making the Swiss franc less attractive. We see a significant drop around the beginning of April, which can likely be attributed to initial speculation of the SNB rate cut. Let's look closer at the most recent candles to see the more immediate action. The most recent candles show a slight upward movement, but it's still within the overall downtrend. This small recovery could be due to short-term corrections in the market. A key level to watch is 0.83. If the price breaks above this resistance, we might see a more substantial reversal. However, if the price fails to break above 0.83 and continues downward, we could expect it to test support levels around 0.8150, then 0.81. Now, let's zoom into the 1-hour chart for more granular detail. Here we see that the price has been consolidating recently without any clear moves. This indecision is likely due to the mix of economic news. Traders are unsure if the tariffs will weaken the dollar more or if the SNB rate cuts are priced in already. A bullish scenario requires breaking above the resistance level on the daily chart, while bearish requires a break below the most recent support. We'll need to watch incoming news for what might cause a breakout. Traders should monitor upcoming statements from both the US and Swiss central banks. To summarize, for the short term, monitor the levels of 0.8150 and 0.83. A break below 0.8150 would likely confirm bearish sentiment, while a break above 0.83 could indicate a short-term bullish reversal. Longer term, traders should watch statements from US and Swiss central banks, plus any potential resolutions in the US-China trade war. Currently, I believe that we're more likely to see a retest of 0.8150 due to the SNB rate cut seeming more likely than a near-term resolution to the US-China trade war.